Hi everyone and welcome back to my morning report analysis videos on Friday 6th of Jan with me, Richard Perry, market analyst at Handset Markets, looking at Eurodollar now, and it is non-farm payrolls day, and generally Eurodollar will tend to consolidate in front of that, and what we have seen is the earlier dollar strength, which dragged Eurodollar slightly lower, has basically unwound, and we're now basically flat on the day. We've had 2 days of positive candles, which has broken Eurodollar higher back through the 105.20 level that I sort of saw as resistance, all these old lows between sort of 105, 105.20 basis of old resistance, and you sort of break back through that, and it looks positive on the near-term outlook. But you sort of look at this at daily chart and you still think, well, I think this is an unwinding move. I don't see this as being a move that's going to have any real longevity in it. You've got resistance now 106.70 to 106.50 to 106.70, and that is I think something to consider. But yes, we've got an improving outlook near term, but I would still be looking to sell into strength. I cannot at the moment, I don't expect the euro to be strengthening for any real length of time in front of obviously all these key elections that we've got this year in the Eurozone, and also the fact that the dollar strength, I think, will continue at some stage in due course. Now, dollar has been driven by treasury yields, which are pulling lower at the moment, so hence the euro dollar pulling higher. I don't necessarily think that's going to continue for too long, because I think treasury yields will continue higher in due course, and that will be a drag on euro dollar lower. But for now, the outlook is rather positive for euro dollar pulling higher, but will it continue? Now 106.15 is basically the very near term resistance, but 106.50 was a spike high that we saw during the Christmas trading, and then, as I said, 106.70, which is where these old highs from earlier December come in. But it'll be interesting to see if or how long this rally can last for. You sort of measure that as a base pattern. You could arguably do 105 above that breakout above 105 from this from that key low at 103.50, 150 ticks, so that's 106.50, bang, and that was the high that we saw. So that is sort of a basis of key resistance, with the recovery sort of target being played out. So much higher upside potential, I think, is fairly limited from these sort of levels. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.